Today's interview is with Damion Lupo. Damion has a fascinating story from starting out to building a $20 million portfolio, starting with his first property that he bought with a credit card, right, which is amazing in itself. So then losing all that during the 2008-2009 recession, to then starting his own hedge fund. And he talks a lot about investors and the psychology of investing. So a really fascinating interview. So if you're an investor, which I imagine you are, this is going to be a great interview for you to listen to. Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Damion Lupo. Hey, Damion.
What's up, Barry? It's good to see you, man.
Good to see you, man. Thank you for being here today. I'm excited to jump into this awesome conversation, which is really exciting to me. But before we do so, do you mind introducing yourself, letting people know a little bit more about you and who you are?
I am not a WWE wrestler. I did see WWE when I was growing up in Alaska, and I remember Andre the Giant and the Ultimate Warrior wrestling, and it was the main event, and it was 60 seconds because the Ultimate Warrior came, this is before he died, obviously. He came running through, clotheslined, body slammed Andre the Giant right in front of me because I had ringside seats with my dad, and then he ran out of there, and I thought, this is crazy. So that was like my experience. It really symbolized my experience growing up in Alaska. My last job there, I was dodging polar bears because they literally will eat you if they catch you outside. And I had to go outside in the Arctic Circle. So I did that stuff. And then I went off into the real world outside of Alaska, did a bunch of real estate I got kicked out of college, did some real estate, built a $20 million portfolio, lost 25 million in 2008, and then reinvented my whole life through that process and built some other companies. And so it's like a crazy adventure. I've started 50 plus companies. It's really just never being willing to quit. Like I'll just keep going and nobody can stop me except for me. And I'm not going to stop. And it's just been an evolution of entrepreneurship the entire time. So I got a lot of scars and I'm definitely very bald. And so I've been through a lot of shit.
Yeah, man, you got like a fascinating story. You cut yourself short there. There's a lot more that goes into that, right? And it's going to be my challenge today is like everything is so interesting about you. Like, well, what do I focus on, right? But I've got to start with like, what did you do in Alaska where polar bears will attack? Do they actually attack human beings? I've never heard of
they don't attack. They just eat anything that moves. So like, if you're out there, they'll eat your ass. I was working in the Arctic Circle for the oil companies when I was 18 and 19 years old. And I happened to be working there in January when it's 80 below zero and the sun goes down and does not come up for 60 days. So I don't know, it's probably very similar to being on Mars. So Elon should practice in the Arctic Circle if he wants to go to Mars, because that's what it's like. So I was just washing dishes, man. I was working my butt off doing, I do things a lot with my mind now, real estate investing and running these companies. I know exactly what it's like to work where I'm sweating and bleeding and cutting myself and losing my sight because I used the wrong chemicals, cleaning an oven. Like I've done the dirty, hard work. And I think it's really valuable. Like you've been in a space and you do some of the stuff now, but going through a space where you're physically using your body and being beat up, like I get it. Like, there's a value to doing it, but I don't want to do it forever. So that's when you have to shift into using your mind and leverage and be smarter.
Yeah, for sure. That's such a fascinating thing. I love polar bears, so it's like really interesting. I didn't know they would.
Yeah, they're great at you, Barry.
Yeah, behind it.
Like, yeah. If you're out there, they're not very cool when they come over because they're fast and they're mean, man. They are mean as hell.
So you had some close encounters?
But yeah, they were at the camp. So they're out there. You don't want them too close because if it's too close, you don't live to tell the story because they're fast enough. If they're if you can hear them, you're dead. But you see them around. They're kind of just wandering around looking for anything that might have a little furry snack. In front of them.
Wow, yeah. Well, they look so cuddly on TV, but there we go.
Coca-Cola screwed that
up. So you say you left school, and it seems like entrepreneurs, right? School isn't for them for a lot of people. If you started 50 different businesses, right, I would say that you have a little bit of entrepreneurial.
Yeah, well, when I went to college, because that's what you're supposed to do. Like all these things that you were supposed to do them. Yeah. It's like, did anybody ever tell you growing up you should be a WWE wrestler? Like that is not something somebody tells you to do. and I was basically told, go to college and then get a job as an accountant or a lawyer, and then make sure you have enough for retirement. Like that was the idea, preferably with a government job because it's really secure. And I mean, I got thrown out of school because I put the bookstore on campus out of business by starting my own, and it just pissed everybody off. And I was like, well, wait, you guys are screwing people. These big systems are screwing people because they have a lot of power and there's a structure around maintaining power. And so I've always been a disruptor. I don't like being manipulated. I don't like people telling me what to do. And I think deep down, we all want to be able to do what we want to do, but we're taught to be in the matrix, to really be told what to do and to shut up and stop complaining and basically just follow along the orders as you're told.
Yeah, and it's funny that what people consider to be successful, right? Like you said, right? If you go to school and was an accountant, like by 99.9% of society, they'd consider you successful, right? But you could be miserable, like hating everyday life, hating everything about your life, right? Is that successful? Like to me, happiness is successful, right? So if you're making $10 an hour working a job you love, or you're making $10,000 an hour as a job you hate, who's the really successful person there, right? Like it's always interesting to me.
I think it's a valid question. People really should think about this because the money isn't going to make you happy. Now, nobody believes that. They all want to go try it. They want to see for themselves. Like, okay, I get it. You know, and look, I've been poor and I've been broke. I've been rich and wealthy, and I've gone through, like, I've had all these different experiences, and I prefer rich. It's being poor pretty much sucks, except it's very simple, and that's one of the things. I'm around a lot of people that have a lot of money, many, many, many millions, tens and hundreds of millions, and there's a different level of stress because you're constantly thinking about defense. You're thinking about the moat and people trying to steal from you because when you have money, everybody wants a job, everybody wants a loan, everybody wants some of your money, envy, jealousy, like all this stuff, and it's exhausting. So being poor is actually more relaxing if you actually have done both of them, and it's nobody's trying to take anything from you. It's really kind of weird. So there's not necessarily universally a better one or the other. There's problems in both.
Yeah, for sure. So then you build a $20 million portfolio from there, right, in real estate. How did you do that? What did that consist of? What did that look like?
So it's funny because nowadays people say, well, I've got a $20 million portfolio because they helped to raise $100,000 for a $20 million.
Yeah.
Not what I did. Yeah. I literally had 150 houses that I owned. I had apartments that I was rehabbing that I ended up losing to foreclosure. I had condo developments that I actually built. I had a lot of different stuff. And it was really just starting off with one house that I took a cash advance on my credit card to buy. And so I'm not condoning that. Don't go cash advance your Visa and say, hey, look, Damion said to do this. I did not say to do that. I said I did that because I was excited. And worst case scenario is, oh, dang, I have a $6,000 debt. And that's what I did. I took over a mortgage and I go, oh, I'm in the game. It was crazy and it got me in the game. And usually you have to be a little crazy because before you have experience, you have no experience. So anything new is crazy. And then once you've done it, it's like normalized. And that's how it started. It was just one house. I did another house and then I did 10 and 20 houses. And it just kept, I was creative. I was using my mind. It was better than dodging polar bears or working in a meat market in the middle of game season in Alaska where I had to clean out the guts of a reindeer in the floor. Like, wow. better experience.
I imagine just a little bit, right? Just a little. But how did you manage to scale, right? So you bought that first one, right? You used your credit card to buy the first one, which is actually, we're not telling anyone to do that, but I've heard that story quite a bit. And sometimes you have to do what it takes, right? And it's a calculated risk, right? Sometimes you have to take risk, but calculate it, right? Don't just go buy out anything and max out your card and just buy a property off the MLS without doing any analysis. But sometimes you have to do that.
And here, people think that if they go out there, like I bought some stuff, and I ended up writing checks to get rid of it, and so is it bad to buy something that's a dumb idea, even though you're just trying to do something? Not necessarily, because you get some momentum going, and you can bankrupt yourself. But even if you go bankrupt, okay, so then you start over. Like it's the problem is people are they're trying to make sure that they time it so that all the lights are green before they leave the driveway. Mm-hmm. And so when I went out there, I was like, I'm going to do something. My only calculation, you said calculated risk. My calculation was how much can I take out on a cash advance? that was what I calculated. I didn't know how to calculate risk or what's the downside. What if the market goes down 20%? I'm going to have to write a check for 35,000 or, and when you're first starting, there's one of the beauties of doing things when you're in your 20s in real estate is that you don't know what you don't know, and you think you can do anything. You think you have superpowers because you're like, oh yeah, I can do this. Those old people, they're just dumb and lazy, and like this is what you think. And it's as we get older, it's more challenging because we've experienced pain, and so we try to avoid pain. It's a natural thing. Unless you're a WWE wrestler, then you're like, let's go get some pain. Different world, but unless you're trying to avoid pain, and so you want to be able to go out there and do a little bit of pain because you'll allow yourself to do it without being afraid of, the trauma of cutting off your leg or something.
Yeah, and that's true when you're younger. You're a lot more fearless. Like you don't know what you don't know, and life hasn't beaten you down. I think that's a great time to invest as well. Because also, if it does go wrong, hopefully it doesn't. You have plenty of time to recover. Right? It's not like you're 55 and you're, leveraging every penny that you have, and it's going to mess you up and it's going to mess up the rest of your life. If you're 21 and you lose everything, okay, it's not great. Don't get me wrong, but you got plenty of time to recover, right?
And when 21 or 55, you lose everything. Who cares? You do it again. But the thing about being 55, and I've had a lot of people I've worked with over the years, where I've had people that came to me numerous times, and they said, "We want your help." Like a couple, and I'm like, "What can I do?" "We want help with our money," and I go, "Like, I don't know what you're asking me." And they go, "We have $1 million or $2 million, and we have no idea what to do." And it's a big problem because you're afraid you're going to lose it, and you don't have the time to do what you did to get it in the first place. And the problem is most people haven't actually learned how to create it. They accidentally ended up with $1 million or $2 million, 401ks. They bought a house. It happened to appreciate. And now they're sitting on this pile of money, and you don't have 35 years to go redo it. So it's tremendous amounts of anxiety and fear. And this is where you have to start building a totally different. It's like, if you're out there in the wrestling world, it'd be a little awkward to see somebody with like a 24-inch bicep, and then their other one is like 14. It's like something's off. How people are. They have this checking account with a 24-inch bicep, and their investing skills are the other one, the 14, and they can't do anything with it. They're like Pee Wee Herman on the other side. And you have to go and you have to actually build that muscle, and it takes time and energy and work. Most people just want to skip ahead, and they say, well, I'll just put a whole bunch of steroids and I'll be done in a month. Like that's the whole plan. That doesn't work. It's not sustainable, and you end up having a heart attack.
Yeah, that's a great analogy, by the way. Thanks for bringing it back to wrestling. I appreciate that. So how do you
that happen with in a world where people they're trying to hack. Everybody's trying to hack and accelerate things. And if you want long-term sustainable health, you can't go from 150 pounds to 250 in 6 months and think you're actually not going to have a heart attack. You're going to have a heart attack. You're going to go bankrupt.
So what do you suggest to people like that? Just start with financial education, with some kind of investing education?
Exactly. I mean, and people go, well, I don't know what to do with finance. I'm like, well, have you ever been to the gym? What do? You go in there and you go to a trainer and you say, hey, I want to be healthy long-term. What's the plan? They're like, here's your diet. Here's your exercise program. A little at a time, build it up. It's sustainable. It's the same thing with money. It's financial literacy, and then the muscle around doing things that get you the momentum. It's exactly the same process, but everybody wants to do it overnight because they watch somebody on Facebook that seemingly has done it overnight, which is complete bullshit. But that's what we see on these feeds. And if you want to destroy self-esteem, go watch Facebook or Instagram. You're like, oh, his life is amazing. My life. Yeah, whatever. Did you see 10 years of Justin Bieber practicing on his piano and his guitar? 16, he's a multimillionaire. Yeah, he was working at his craft from the age of 4. People don't see that stuff, and so they think it's all they're behind. No, it's about doing the work.
Yeah, you never have YouTube videos about how my life sucks or how everything's going wrong right now, right? It's always like, this is amazing. This is like, that's so true. And it doesn't always paint the right picture for people, I think. Yeah.
It sells ads, and it sells people's eyeballs.
That's the thing, yeah.
So it works, but just not for the people watching.
Yeah. Well, interesting. From that first property, how did you scale to such a large portfolio? What kind of strategies were you using to buy these properties, to buy these apartment complexes?
So the strategy was just working my ass off, and the problem is it almost killed me before I was even 30. And it was because I was going around the clock. I was sleeping under my desk at my office. I was running so hot. It was literally like pure adrenaline, steroids, crack, everything being pumped into me 24/7. And I just kept going. And so I scaled because I was just relentless. And that's good for a while to get a job done, but it will kill you. And it almost did kill me. I ended up in the Mayo Clinic and was there, and they were testing me, and I was like literally going to crash and burn and die. I thought I had cancer. I mean, I was passing out. It was a big mess. and nauseous for 2 straight years. Like people that have had cancer and they say I'm really nauseous. It's hard to understand how bad life can be until you're actually nauseous every day, all day for 2 years. Like you start thinking death would be better than this. And so I scaled because I pushed so hard and I hired some people, but I also hired really bad people, bad partners. And it was a reflection of my own personal development because I wasn't really developed. I was relatively new, didn't have the experience. And so I hired other people that made me feel good. Instead of getting pros, I found cheap people and criminal partners. And I was like, oh, this is great. They'll tell me what I want to hear. And I don't have to pay them that much. That leads to a business where you lose 20 or $25 million because you have the wrong people around you. And so you can scale it, but then it's not going to last. It's just it's like a lottery ticket.
What would you have told your younger self then at that time then? Because you didn't think that you were doing something wrong there, right? I don't think you knew that, you were just trying to scale and grow your portfolio, grow your net worth, and create this life for yourself that you wanted, right? And I'm sure you were just working hard and thinking you were doing the right thing. But how can someone, kind of look at that and realize, hey, this isn't the best way to do things?
It's funny because back then I had mentors, and I even had a mentor that I was paying $10,000 a month to, and over 2 years paid him 400,000. His name is Dan Pena, and he's a relentless, ruthless person, kind of like some of the people that you and I were talking about before the recording. The guy is he's really good at business, and he's all about making sure that he wins 100% of the time, and he'll do anything to win. He'll throw you under the bus, and I had that happen to me. So this isn't my opinion. This is just the experience I had. And the problem is if you hire people, sometimes when you hire people, especially mentors and coaches, you have to be really careful about hiring people that will just tell you what you want to hear versus hiring people that will tell you what you need to know. And so the advice I would give myself back then is hire people that are older, grayer, balder, wiser, that will tell you what you need to hear and pay them enough to where you pay attention. Because if you just get advice from friends, family, a cheap mentor or whatever, you're not going to get the truth, and you're not going to pay attention to it, even if it is the truth, because it's not that painful to ignore it. When you're paying somebody, like I listened to Dan, $10,000 a month. It was like half-hour conversation. I was like, okay, this is like how many hundreds of dollars a second? And so, when you're in that space, the problem is if you've hired the wrong person, you'll take their advice because it's so painful, and you'll take their advice right off a cliff. So I would tell myself, be really mindful of who you're listening to. Make sure that they're not just pitching something. Make sure that the advice that they're giving you is based on their life. And I look at that with all mentors. It's different with a coach. Like you look at Nick Saban, who's maybe one of the best coaches ever, and an amazing coach. Is he a great player? I have no idea. Nobody's ever heard of Nick Saban, the player. But could you argue with him as being a coach? Very different than a mentor. A mentor has actually done it. They've been out there. And so it's really important. You don't want to just listen to somebody that read a book or happened to go, they went to a seminar and now they're teaching about real estate. Like that's baloney. You're going to get yourself in trouble. So I would be telling myself, go find those people that have the scars from doing it, that are still doing it, that understand it, that live it, and listen to them very closely.
Yeah, that's good. That's phenomenal advice. That's phenomenal. Because like you said, there's so many people out there coaching now, right? Everyone. And
they're called charlatans. They're snake. It's a really lucrative business because everybody wants to hack. And if I can tell you, if I put up a landing page and say, hey, here's how you make $8 million in 4 months, and here's my formula, it's like, okay, well, people will buy it. They'll buy it, and you can make $8 million selling that shit. And then guess what happens? People are like, well, look, he's got the formula, but it's just it's a pyramid where somebody's selling something about how to sell something, and then they sell it to the person that then sells it again. It's like, well, wait, has anybody ever actually done anything? No, they just keep selling the information, and there's a danger. You got to go back to the source.
Yeah, for sure. What if you don't mind me asking, what unraveled your portfolio? What caused the sort of downturn of everything? Was it 2008, 2009?
2008. So it was a complex thing called ego.
Oh.
And it was my own dumbass thinking that I was invincible and I could go and do whatever I wanted. The problem right now is the same thing. People have been making a lot of money, especially in real estate the last decade. There's a lot of people that have made many, many millions of dollars in houses and apartments and things. And the problem is this is their first cycle. So they've not been through anything and they think this is normal. It's not normal. And back then, I didn't have any cycle experience. So I thought, oh, you make money. I made a bunch of money in real estate. And in 2005, I had a bunch of cash and I went and I started doing other projects because I didn't know that you could actually have a downturn. And so in a period of 12 months, I took 5 projects, and instead of making $1 million or 2 on each one of them, I lost over $1 million net on each one of them. So I had this $20 million portfolio turn into negative 5 million in 12 months. It's because my ego thought I was invincible. It said, oh, you are so good. You're 10 feet tall and bulletproof. That'd be like my wrestling personality, 10 feet tall and bulletproof. It'd be like looking down on the Undertaker, like, give me a break.
Yeah, but I'm sure, like at the time, all around you, everyone else was the same. It seemed like at the time, right? That's what I've heard all the time. Is that everyone else thought that they were amazing. Everyone else thought that they were going to make all this money, and real estate always goes up, right? It seemed like that was the mentality at the time.
People think one of the problems is we get into these bubbles where we're just around people that are like us, and we go to the same seminars. We go and we hang out with people. And then we reinforce with algorithms now. They help us, like YouTube and Google and Facebook. They reinforce our bias towards whatever we think. And then we're like, oh, yeah, that's how everybody thinks. Like, yeah, no, not everybody's an idiot. Just the people you're around, because y'all are idiots together. And so you don't have any counterbalance. You don't have any. It's really powerful getting back to this perspective you get from somebody that you pay to give you honest feedback. When you don't have that, you'll get feedback. It'll reinforce your bias, and then you'll think, "Oh, I'm so smart. I'm so much smarter." And it's different this time. I hear people say that. It's
oh
different.
yeah.
Oh, God, no, it's not. That's what everybody says every single time. It's different. Like, okay, good luck. Like you can't tell somebody. You cannot convince somebody that they're wrong when they're convinced that they're right. Like, there's no way until they're open. If they're closed, forget it. And so now I don't go try to. I try to fix people. I try to go in there and rewire them, and people don't like to be rewired. It really pisses them off, and it's frustrating to the person trying to rewire because I feel like I know, and they don't want to be rewired. So now I hope it works out. You'll learn something, or you won't, but that's your responsibility.
Yeah, man, it's so true. With my friends with real estate, right? They don't invest or they don't do anything, and I'm trying to be like, hey, because I'm so passionate about real estate. I'm like, hey, you can create at least a passive income for yourself at the side with real estate, and you can do it now, blah blah blah. And you try and talk to them, and so you're blue in the face, and it just gets painful. In the end, it hurts you more than it hurts them, right? And you're just like, okay, there's no helping stupids. Sometimes you just gotta kind of, yeah.
Gonna be stupid. Stupid defends itself to the death. There's like a Monty Python, cake or death. They're like, not death. You're like, what's wrong with you? People, it's a fundamental principle that Dr. Cialdini talks about in the book Influence called consistency. And whatever we say or whatever we do, we tend to do the same thing because of consistency. We don't want to be looking a fool by changing, because then people look at us like, oh, you're not consistent. You are a flake. They call politicians flip-floppers when they do that kind of stuff. And so nobody wants that. It's why if you can get somebody to donate $1, they'll donate 10. It's because they're consistent in their activities and behaviors. And we tend to do that without even realize we're doing it. And we end up getting locked into a faulty belief system.
Yeah, that's such a great point. So how did you get out of that pull? Did you have to foreclose on a lot of your stuff? Did you have to short sale? Or were you able to just sell and kind of get out like that?
Now, so when the markets move, so there's an old saying on Wall Street that bulls take the stairs and bears take the window. The markets crash, they go down. You're not necessarily. I sold stuff, but I wrote checks, giant checks to get out. I remember the first time that happened. Many times it happened. There was a title company that called me and they said, "Hey, we need your wire information for the sale." I bought a house and I made a huge, that's a whole episode on that one house, all the mistakes. Ultimately, I was able to sell it a couple years later. And they said, "We need your wire information." And I said, "Why would you need my wire information?" And they said, "Oh, you're right. You're writing a check." And I'm like, "Yeah." They're like, "We thought you were you're the seller and you're writing a check." And I'm like, "Yeah, I'm the idiot seller that made all these mistakes." It was like a $35,000 check. And so, that was part of the experience. Doing that. So I did that on a number of properties, and then the numbers got so big, there was no way to do it. So when you have a project that you lose $2 million on, when you only have, I had a $5 million net worth, $20 million portfolio. you can't lose $2 or $3 million on each of 5 properties, and it doesn't work. Like, you can't write the check. There is no check. People said, like, there were investors, and I hated that it happened, but there were investors that said, well, hey, I know this property didn't work, but you need to give me my money back. And I'm like, okay, so how does this work? So as an investor, if we win and it works, then you get to keep it all. But if it doesn't work, then I'm supposed to write you a check. Like, that's how it works. I was like, you are an immature child to do that. I mean, I've had investments where people's businesses, or I invested with them and they failed. And I said, okay, well, it didn't work. Like, I didn't say, look, you're the US government, indemnify me. Like, I need a check because I can't take a loss. But most people are like that. They think everything is always insured and it's always going to go up. Most investors are a disaster waiting to happen if anything goes wrong in the deal. So we're going to see a lot of lawsuits. We're going to see a lot of big problems when real estate cycles, because most of the investors out there are not truly investors. They're speculators and they're children.
Mm. Yeah, I guess, yeah, because I guess if you're not prepared to lose everything, right, you're not really an investor, right? You don't understand how investments happen, right?
And, people, even if they lose a little, I had people that freaked out when they lost 10%. They're like, oh my God, my life's over. And they were reacting that way. And, lawyers and everything else. I'm thinking, seriously, you lost 10% and you're a big crybaby. Like, wow. And then people get upset if you don't get them the return that they were expecting. Well, and you know why? Because they were comparing themselves to somebody else on Facebook. Well, my friend got 19%. I should be getting 19. I only got 14. Oh my gosh, I'm suing you. This stuff happens because you're dealing with small idiots that they're more of a lottery mind. They don't have the context of being a professional investor. Even if they're an accredited investor, even if they have 200,000 in income, they're still acting as if they're 14 years old. Like, it's really kind of embarrassing, which is why there are filters and why I personally don't like really working with people that can't take one, they can't take a hit. I want to know people can take a hit. Like, I don't want a bunch of girly men out there. Like, give me a break. I want people that are tough, that can be in the real world where bullets are flying. Investing is like war, and bullets happen and people get hurt and people get killed. I mean, this is pretty literal. I had one of my projects that I ended up losing to foreclosure, big apartment. I had some people break into it back in Memphis, and I got a call one day and they said, hey, break in. And I said, okay, what does that mean? They said, they stole all your copper. And I said, 119 units worth of copper. How much is that? They go, about $250,000. They tore it out of the floors. And I go, well, crap. Well, fortunately, I had insurance. The problem is it was with Lloyd's of London, which is a criminal organization that doesn't cover anything. You got to go to freaking London to try to sue them. So I ended up with a big old loss. I lost 170,000 after I got my little teeny check. And that wasn't the problem. The problem is 6 months later, I got a call and they said, we got a problem. They stole your copper. I'm like, again? I have an armed guard there. How could they steal it? They're like, that's the bigger problem. I go, what do you mean that's the bigger problem? That's another $250,000 hit. And they said, no, that's the bigger problem is they killed your guard.
Oh, wow.
And so live bullets, my guard was killed protecting my property. It's not just money. People can die. Like, it's real. And people think, oh, it's about an internal rate of return. That shit can really hurt you and carry the weight of that. Most people can't deal with that. So emotionally, they go back into this temper tantrum of children. And, they yell and they scream and they sue. And so I think part of this is just it forces you to grow up, or it's an opportunity to. And unfortunately, most people are dealing with, 12-year-old emotional states.
So do you, after that hit of losing the real estate, do you invest in real estate at all now, or are you clean your hands off? That was too much PTSD after something like that?
There probably was PTSD, man. It was probably. I mean, it took me years to even consider the idea of real estate. When you have that type of trauma, unless you're just a sadist or a masochist, or like you're just like, I like pain, which is probably a lot of wrestlers. I like pain, bring me pain. It took me a while to even think about it. And then when I went back into the space, I was doing lending. I was lending to people with their real estate, and then the thing that got interesting to me was the self-storage space, and partly because I like the idea of a tin can that's unlikely to be regulated by the government, and I people love their crap, and Amazon is helping people get more crap, and they don't have to where to store it. So I like that space. The problem now is that there's just way too many people. There's so much dumb money and very smart money, and all this money is chasing certain classes. So it's challenging. You got to really have a niche, and that's one of the lessons. Don't try to chase your stuff all over the country. You're never going to get anywhere because somebody is going to focus on one area in one asset class, and they're going to beat the crap out of you because they're going to have better information. They're going to have better execution intelligence, and you're never going to win. And if you do win, you're going to buy a bad deal. So it's there. It takes a while after you get beat up and you're in the timeout box. It's like, you're hospitalized, and you gotta get back into it. And then you have to be rational. And it's like right now there's a lot of irrational activity going on. So if you're going to invest, it's great. Just make sure that you're not an idiot chasing other idiots.
Yeah. Well, having been around for the last recession and seeing what's kind of going on there, obviously no two recessions are ever the same, right? It's like, it's not going to be, everyone's like, oh yeah, this is 2008, this was happening, blah, blah, blah. Well, that's not going to happen again, right? You can kind of see that for sure that it's not happening, right? But there could be similarities. There could be some stuff that you see. Do you have any feel about what's going on now? And again, this is not asking for a crystal ball. It's just maybe your feelings about how things are.
We're in it. It's funny. It's new and it's the same. So the new part is politicians and the central banks are now under the mistaken belief that they can print because of modern Marxist theory or modern monetary theory, whatever you want to call it. They can print as much as they want and there's no consequence. The problem is they're wrong, and it's just a matter of time. What's happening is you're seeing one of the reasons we see all these assets going up, they're not really going up. The dollar is getting beaten to death. So an apartment that's now twice as much as it was 4 years ago, it's the same apartment, basically. It's just that money has become so cheap because it's manipulated. So I look at this and I go, could this last? Well, Japan has had a zombie economy for 30 plus years. Could we do the same thing? Maybe. Could we also have a crash in 2021 and have prices drop? Jeff Booth, the author of The Price of Tomorrow, would argue that's coming this decade because of technology. Technology is very deflationary, and it doesn't matter how much money you print. Technology will drive prices down by 70 to 80%. That's a massive shift, huge opportunity. So either one can happen. So what do? Do something, do nothing. What do? You prepare for both, and you make sure you're covered on both sides. And that way you're not worried. Like most people go, I'm going to pick one and then it has to happen. That's freaking stressful, man. You want to like be able to sleep at night. So my strategy is, okay, here's the two most likely things. And then I'm trying to come up with the black swan, but I'm saying, okay, if the market goes up or the market crashes, like I'm positioned both ways. So I go and I live my life. That's how people should be operating, not with real estate's always going to be good. It's always going to go up, or it's going to crash this year. I mean, my friend Peter Schiff in Connecticut, love the guy, but he has literally predicted 18 out of the last 3 recessions. The guy is a doom and gloom and bear, like everything's going to crash. And I'm like, dude, you missed out on the Bitcoin run the last 10 years. Like all you said was gold only. That's it. And the market's dead. He didn't see the Federal Reserve and the Euros and all these other banks printing. He didn't see that happening because he's got a cognitive bias. It's a narrow tunnel vision. And that's what people need to really understand, that just because it was the way it was back then doesn't mean it has to be that way. And politicians, they never cease to amaze how crazy they can be. And it's based on not reality, but their own belief on what should be.
Yeah, that's so interesting. Yeah, I listen to Peter Schiff too, but he's kind of funny. You've got to really take him with a pinch of salt. I know that he sells gold as well, right? Schiff Gold, like, hey, gold is a great investment. And by the way, I sell gold, right? It's kind of funny, but he does bring up a lot of good points, and I like to listen because it's always good to have the yin and the yang. I think you've got to listen to try and have someone that's optimistic and pessimistic, right? And then you can kind of maybe get somewhere in the middle and get the true picture of stuff.
It's a really great point. There's a great book called Thinking for a Change by John Maxwell. And I read that. I did a course on it about a year ago where I taught 11 of the different thinkings. One of the reasons that I read that book and that it's so important to me, back in the 2000s when I was doing real estate, I had one thinking called optimism. Everything is going to be better, and I'm going to get richer, and houses are going to go up in value, blah, blah, blah. I didn't understand pragmatic or pessimistic. I didn't understand the different types, and they all serve you in different ways at different times. And oftentimes it's about having multiple types of thinking the same day. And if you don't practice that, you're going to be really, really, it's like back to Schwarzenegger on one side, Pee Wee Herman on the other. Like you're going to be really out of whack, and you're going to be tilting over all the time.
Yeah. So would you have, so the suggestion for people now is to have an eye on both, right? Have a look at the upside. So what is the upside on this property? How much profit can you make? But also look at maybe what is the worst case scenario, and are you comfortable living with that worst case scenario?
The way that professional investors like I will look at things, it's always a question of What's my downside? When do I get my capital back? 100% of the time, that's the first question we ask.
Mm.
What's the downside? When do I get my capital back? Idiots say, how much am I going to make? Who cares how much you're going to make? You have a 90% chance of losing your money. So you start with it's professional pessimism. And then you go, okay, I'm comfortable with that risk. And then from there you say, what are the possibilities? But people go to the other side, they get emotional about it, and then they use logic to validate that using just a limited set of data points. And they're ignoring everything else because it'll screw up their consistency. And so you really have to start with, what's the worst thing that can happen? And it's not just losing your money. In that Memphis deal, I had this jackass lender that was a complete scoundrel. He was a hard money lender. He loaned me the money. I signed on it personally. And when the property was foreclosed, he sued me for the deficiency. So I owed him $1.2 million. Somebody at the auction, which was him, bought it for $300,000. This is 119 unit apartments.
Wow.
And so
300,000. Wow.
After I had spent several million on remodeling it. That's how bad I was. I didn't know what I was doing. And I learned this after the fact. And so he bought it for 300. Then he sues me for 900,000. And he goes, it's called a deficiency, where you get sued for the amount that the lender lost. Well, this criminal, literally criminal, his name is Alan. If you run into a lender named Alan in Memphis, call me and I'll tell you if it's the right one or the wrong one. You want to run from this guy. So he had owned this property numerous times. He knew the property. He knew I was going to get killed. He knew I was naive and young. And so he had already sold it. So within 30 days, he closed and sold it to a guy for like $1.5 million. So he didn't lose anything. When he foreclosed, he already had somebody in escrow to sell it. He tried to double dip. And so I spent 2 years in I call it prison. It was in court, and we beat him because finally, because he was trying to get a settlement where I would just write a check. And what the court said were, hey, you literally you can't double dip, dude. You didn't take a loss. You made money on your thing. So you can lose more. And what a lot of people do is they don't realize when you sign your name on something, you should treat that the same way you do cash. If you put $10,000 down and you borrow 90,000, that's $100,000 of exposure. And you should be getting a return on the whole 100, not on the 10. People go, oh, I'm getting 27% of my 10,000. I'm like, no, you're not. You're getting 2.7% on your whole exposure. And they go, that sucks. I'm like, I know, but that's real. That's what real investors look at. So it's a very different way of approaching things. And naive new investors don't have a clue about risk mitigation. They just go, I'm making 27%. Like, at what risk?
Yeah. Well, and with that, like, maybe talk a little bit about risk mitigation, maybe on a high level. Obviously we can't be here all day, but some things in terms of risk mitigation that people should consider and think about.
So what I just mentioned about signing on, avoid signing on personal guarantees at all possible. I mean, it's at all possible. Don't personally guarantee. And if you do guarantee, get out of the guarantee as soon as you can. You go back to the lender and say, hey, the thing I like about bigger projects is they tend to have non-recourse lending, which means if the project dies, it goes back to the lender and they don't sue you. There's nobody to sue. They have bad boy carve-outs, which means if you do something like fraud, misrepresentation, they can still sue you. But if the economy collapses, I had friends that had tens of millions of dollars in projects. 2008 happened. They were all non-recourse. They just gave the stuff back. And it was like they moved on. That's one of the ways to do it. It's also important that you don't put all your money with one person in a project that you don't control. I'm not opposed to putting all your money in a project that you can actually influence, but if it's passive, you're an idiot. I don't even care if it's Warren Buffett. And that'd be a pretty convincing argument to put all your money with Warren Buffett because the guy knows what he's doing, but he's going to be dead. Like, he's not going to last forever. So putting all your money is one of the things people do. They go, I'm so excited about cannabis. And I'm like, okay, cool. Like, it's pretty mahalo. It's great. But at the same time, do you want to just put it into something that's emerging? And you've got to be careful about, it's called position sizing, but even more. So here's how it works. When you think about your investing, there's three things that influence your success. There's your psychology, there's your position sizing, which is your risk management. And then there's the system or the thing, the apartment, the gold, the stocks. Most people focus on the last thing. The last thing is 5% of your success. That's all. That's it. You pick the right thing. That's 5%. Then there's your risk mitigation, which is about 15%. It's how much, like, are you putting 5% of your net worth? Or are you putting 25%? The other 80 or 85% of your success is your own damn psychology. So what are you supposed to do with that? It's called personal development. People don't want to do that. They're like, no, I need to know the system. I'm like, the system doesn't matter. You can make money selling pencils. You can invest in stocks or freaking what are those, like those emus, like those crazy birds people
Yeah.
matter. The system doesn't matter. You matter as a human being because your emotions will drive you off a cliff or into wealth. It's all about psychology, and that's the hard work. That's what takes years. And that's where you build the muscle. So if you're going to focus on your own training, it's not on the system, it's on your psychology. So you want to go work with people like Tony Robbins, with NLP. You want to have coaches. You want to have a therapist that takes you and unpacks the layers. You want to have masterminds that'll pull you out of your own stupidity. That's where all the money's made. It is not made. The people that went and invested in GameStop, they're like, yeah, we're Reddit mob. Like, okay, cool, but you're a bunch of morons. You have no psychology. You know who won? Who ultimately won? It was still the hedge funds, because they have the psychology of professional investors. They're not emotional. They're just like, okay, we lost $1 billion, make another bet. Like, the mob was like, oh my God, don't sell. You got to keep buying, because they're emotional. They're crazy. And that's where you make all your money, is understanding and controlling your psychology and your emotions.
Wow, man, that's so cool, because so often in whatever niche people are in, right, it's about like, oh, learn about that niche, like multifamily, right, that I invest in, right, learn about cap rates, learn about cash on cash return, learn about IRR, learn about managing it, learn about construction, right, and you need to know, right, no problem, but who you are as a person, right, and there's a lot of people, one person with a lot of skill set, another person with a lot of skill set. One is successful, one is not, right? What is the difference, right? It's just what you said, right? It's that person, who they are as that person, that self-development that they've gone through. So I love that. That's really cool, man.
It's also the difference between, and this is a huge thing, a lot of people don't understand that business skills, like understanding cap rates and doing all these things, those are all technical skills that are really, really valuable as a business owner. If you're building an apartment, you're going to sell it. If you're building a business, you understand the technical pieces. That's great. Being an investor is a completely different set of skills and tools and emotions, because you have to understand how to take losses. You have to understand how to position it correctly. In a business, I've had 50 plus companies. At least half of those died. And I'm like, okay, but I haven't lost all my money 50 times or 25 times. I've done it 3 times. Still a lot, but it's part of the process. With businesses, you tend to take risks because you're trying things. With investing, you do things because you have an expected outcome with a rational expectation that you're going to lose X number of times out of Y. And so you have to understand these different pieces. And most people think they're the same, which is why when most people retire at 50 or 60, they go, oh, I got $2 million. And then all of a sudden they're supposed to be investors with no training. Holy shit, that's a disaster waiting to happen right there. And so you have to start developing that stuff. And how do you do that? You get involved inch by inch, and you start getting in the game, and you learn your psychology, and you watch yourself, and you have people giving you feedback, and you're going to take hickeys, and you go, okay, well, that wasn't fun. What did I learn? Versus, oh my gosh, I'm so stupid. Like, that's how most people react, because they're taught to be idiots if they ever make a mistake.
Yeah. Well, cool, man. This has been a fun interview, man. There's so much great insight, man. Like so many like little lessons and stuff that people can learn from, including myself, like taking notes as we're going. So I really appreciate you sharing that. But as this show is called Wrestling with Real Estate, I like to incorporate some wrestling related real estate questions. And I think you had a bit of a wrestling background of watching anyway, that's for sure. So you'll be good at this. The first question is, what would your wrestling name be?
Demon Wolf. And it's almost cheating, because my name is Damion, so it's Demon, and my last name means wolf in Italian, but it's just kind of cool. Demon Wolf. So like, hey, you know what? Thank you, parents. Thank you, grandparents. It's going to be Demon Wolf. That's just how it is.
Man, that's badass. Yeah, you don't have to explain that. Demon Wolf is a pretty badass name. That's awesome. So every wrestler has a special move. What is your special move?
I think my special move is the crybaby, because when I get a hold of somebody, I make them cry. And sometimes it's through a breakthrough where there's this epiphany. Oftentimes it's because I drill so hard into the truth, it breaks through, and there's like an emotional experience of, oh my God, there's the truth. That's what's real. And there's, when you get to the reality, it's one of the coolest things with a lot of personal development or seminars, when people break down through the emotion, and they actually feel, because when you feel, there's truth. And so the crybaby move is what I do. I'm really good at asking questions, getting to the heart of the truth, and knocking all the bullshit out of somebody's chatter. And it really helps them to shift their life versus going on a merry-go-round through the past.
Yeah, very cool. Well, what's been the biggest body slam you've taken?
The losing that 20 million was a pretty big body slam. Yeah. The other one, and this is back in 2013, right before my dad died, I flew up to Alaska and met him, and he told me left a voicemail and said, "I'm stage 4 cancer. Just wanted to let you know. Have a good day." And I was like, "What the hell is that?" So I flew up to Alaska and sat there, and we had this conversation. And he looked at me and he said, there were so many things that I wanted to do, and it's like regret stabbing me in the face and the heart and the balls. I mean, like I'm just getting crushed and pummeled and in pain. But the thing that hurt, and I've never actually told anybody this, was that we had a plan to go to Italy, and he never went. That's where our family is from, Italy. We had this plan to go, and I got so mad at him on a trip. I basically said, "Screw this! I'm not talking to you. No trip. I'm out of here." And he was relying on me to go on the trip. I was going to plan it. I was doing this whole thing, and when that happened, when he got sick and he ended up passing away, the body slam was, man, my arrogance, my ego, my righteousness prevented that experience for all of us. And it was pretty painful. Like I've never shared that piece of that story with anybody before. It's being mad at somebody and making them pay. You might actually be the one that pays the price if you have that mentality.
Yeah. Wow. Well, thank you for sharing, man. It's so deep, man. It's incredible. Thank you for sharing. I'm sorry that happened to you. So was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it?
So about a year ago, I launched a hedge fund and with real estate and gold. And after having gone through the process, when you, as an investor and as somebody that's syndicated before I knew what syndication was, raising money for people and having deals go bad and having people hate you, like they want to kill you or they want you to die, they want you to burn in hell, and they tell you these things. It's a pretty painful experience. And to go out to the market and share an opportunity with people, I'm like, I see the opportunity and I want to do it. I'm on the top rope and I go, man, I don't want the experience of people telling me that they want me to rot in hell again because something could happen. And I finally said, you know what? It's worth the risk because these are people's lives where I could help them become financially free and break those shackles of slavery. And so I jumped, and it's because I jumped, those chains are breaking, and it's worth it. But I was scared to death because the pain from the past is still very much there, and I can still feel it.
Mm. Yeah, for sure. Well, man, this it's been absolutely fascinating. It really has. I love listening to you talk, and just been such a fun interview and such a fun conversation. But for anyone who's listening who wants to reach out to you, wants to find out more about what you've got going on, or if they just want to get in contact, how can they do so?
Best thing to do if you want to find out more about me is go to financialunderdog's.com, or check out the podcast. It's Monday through Friday, and you get to hear it raw, real. I mean, it's like a daily body slam, and if that's what you want, that's what you're gonna get.
Yeah, I don't think you sugarcoat anything, right? and I respect that a lot, like that.
Life's too short, man. I mean, it's either all in or I think it's a Helen Keller thing. Life's an incredible journey or nothing at all. Whoever said that is right. Like either go all in or don't. But like when my dad made that comment that there were so many things he wanted to do, he didn't go all in. He was always playing it safe. It's any sport. You can tell when somebody's playing not to lose because they lose. And that's what most people are doing. They're playing defense when they should be on offense. You're not going to win on defense. Contrary to what people say, oh, our big D was what won the game. How do you score points with your D? It doesn't work. You got to have an offense.
Yeah, cool. Well, thank you for taking the time. I really appreciate it. This was awesome.
Appreciate you, Barry. Thank you so much. This is great.